Hello, this is Professor Malorani. I hope each of you is staying safe and doing well. Um, I'm confident that together we'll get through this, and I hope you have some time to look out for the welfare of your family, your friends, and your neighbors as well. As I've said every week, if you have any problems or questions about the course material or anything at MCPHS University, please email me and I'll do the best I can to support you in every way I can. So during the week of April 13th, we're going to focus on a couple of things. First is the Federal Reserve Bank, their role in the U.S. economy. And we'll also continue to take a look at the financial crisis and the ensuing Great Recession, which originated with the financial crisis of 2008, 2009. So I'm going to call this part 2. It deals with the Federal Reserve's response to the financial crisis and Great Recession. So this week you'll see there, as we have with every week, materials for you to review. So we have the Federal Reserve Bank and we have the Fed response to the financial crisis. There's a graded assignment, and then there's 2 discussion board questions. The first is on the response to the financial crisis. So I'd like your initial response by Thursday at 11 o'clock, and then respond to one or more colleagues by Sunday at 11. So what I'd like you to do is watch it goes about an hour. It's an HBO special. I think you'll find it relatively entertaining. It's called Panic, and it talks about kind of the behind the scenes of what was going on during the financial crisis meltdown of 2008. And then I ask you to answer some questions about what actions were taken by the federal government and the Federal Reserve Bank to respond to the crisis. And do you think those actions were appropriate? Because not everybody does. Some people feel as though the federal government and the Federal Reserve overstepped things that they should have done. And what more or less do you think could have been done? So that's one of the main things I want you to do this in the week of April 13th. The other is just a general conversation about the Federal Reserve Bank, whether it should be independent from the President and Congress, and what you think the Fed should do as we battle through the public health emergency of the coronavirus and the ensuing impact it's having on our economy. So let's start now on the taking a look at the Federal Reserve Bank, and I'm going to talk to you briefly about some of the materials I've posted there. Okay, so we talk about the Federal Reserve Bank, or the Federal Reserve System, which is also called the Fed. It is the central bank of the United States. It was established in 1913, and one of its main purposes is to ensure the economic stability of the United States. It, in addition to handling some key banking roles, it also is the lender of last resort in the United States. So what its roles and responsibilities include they conduct the nation's monetary policy. So this is, as we've talked about earlier in the semester, the monetary policy deals with the money supply and the interest rates in the U.S. economy. It's the lender of last resort, and we're seeing that play out right now due to the coronavirus. So we're seeing the Fed step in and pump in trillions of dollars into the banking system to ensure the banking system remains liquid and is able to respond to the needs of its customers, both commercial and individual customers. And it also supervises and regulates banking institutions and operates the nationwide payment system. So the structure of the Federal Reserve System is there's something called the Board of Governors. There are 7 members on the Board of Governors. They're appointed by the President and confirmed by the Senate. Each of them, except the chair, get a 14-year term. The chair gets a 4-year term. The current chair is Jerome Powell. He had succeeded Janet Yellen, who had succeeded Paul Bernanke. So they are the spokesperson for the Fed and among the most powerful people in the United States, if not the entire world. So there's the Board of Governors, and then under the Board of Governors, there are 12 district banks, one here in Boston, over in South Station. There's one in New York, there's one in Chicago, and other key metropolitan areas. And then the other key part of it is something called the Federal Open Market Committee. And this is a 12-member committee that meets once a month to determine what the monetary policy should be. And so very important committee. They decide on things like the discount rate, the money supply, and other very important issues. So as I said, the 7 members are the Board of Governors. They get 14-year terms, except for the chair who gets a 4-year term. They analyze economic data, they supervise the banks, and they basically exercise monetary policy and when necessary, play the lender of last resort role, which they're currently doing due to the coronavirus. Okay, so here's where the 12-member banks are located. And they basically, if you think about these 12-member banks, each of them has a bank president and a lot of resources. So in addition to carrying out the monetary policy for the for the Board of Governors, they also become experts in the particular region. So the Federal Reserve Bank of Boston is an expert in New England, the New York Bank in the New York region, and so forth. And so they closely monitor what's going on, not only nationwide, but also in each individual region. And based on the feedback, they'll have either expansionary or contractionary monetary policy. Expansionary is designed to grow the economy, to increase employment, and contractionary is designed to slow things down. So right now we're seeing something called expansionary. A vast amount of reserves are going into the banking system. The interest rate's already been dropped to 0. The interest rates that the bank controls, because they don't control the rates that you and I pay, but they do play a strong role in influencing the perception of where interest rates should be. So they really drive where interest rates are, even though they don't actually control the actual rate, the student loan rate, the mortgage rates, and things like that. Those are actually done independent of the Fed, but the Fed's direction and signals tell the other banks what direction they should go in. So as I mentioned, they have a lot of administrative functions, which you can read through here: operate the payment system, they distribute the nation's currency, they supervise and regulate banks in the United States, and probably their most important role is to conduct the monetary policy of the United States. And they do that through the Federal Open Market Committee, which is made up of the 7 Board of Governors plus 5 of the district presidents get to rotate through on the Federal Open Market Committee. So you can read through this: supervision and regulation, financial services. They do a lot of research, so they're trying to constantly understand what's going on both in the U.S. economy and globally, and sometimes they'll coordinate with banks from other countries. So monetary policy, which we'll talk about in more depth next week, is basically the key tool that the Federal Reserve Bank is responsible for. So where the President and Congress are responsible for fiscal policy, which is government spending and taxation, the Federal Reserve Bank, which is private and independent of the government, so they get to make their own decisions, they carry out monetary policy. They carry out key decisions about the money supply, about interest rates in particular. And they do that through the Federal Open Market Committee. And this is the 7 Board of Governors plus 5 of the bank presidents, the 12 district bank presidents. They meet once a month. Their meetings are secret, but they do publish the minutes at some point after, so that people get a sense as to why they made the decisions that they did. So the goals of monetary policy are the goals we've talked about all semester: full employment, sustainable economic growth, and stable prices. And right now, so the nation was doing quite well over the last decade in achieving these 3 economic goals. Unfortunately, the coronavirus and the shutdown of the US and other global economies is going to play a big role in making this picture look much different than it has for over a decade. So we're going to see, unfortunately, lots of people out of work. We're going to see the economy starting to shrink. And I'm not really sure what's going to happen to prices. They may actually come down, which is not something economists generally want. But so because of that, what's going to happen is we're going to see both the Fed and people on the fiscal side exercise expansionary policies to try to get people back to work, get the economy growing again. And hopefully that happens quickly. But the truth is, we don't know. We're in uncharted area right now. We don't know how long the coronavirus is going to impact the economy. And we don't know, once people start to go back to work, how likely they are to continue to do the things that we've done historically: go to restaurants, go to sporting events, travel, all things that are important to helping the economy maintain itself and grow. It's all to be seen, and but I do know that I can say with a high degree of confidence that we'll see both the Fed through monetary policy and the President and Congress through fiscal policy try to do everything they can to move us towards these three economic goals. So open market operations, the big advantage is that it's dynamic. They can move quickly. They can move with great abundance, and they can do so, either in their regular meetings or most recently they've called emergency meetings, and they really have very few restrictions in terms of how much and how quickly they can do things. So it's a very powerful tool, and the Fed has complete control over it. So they have control over the volume, the pricing, and if they decide that the U.S. economy recovered more quickly than we might think right now, then they can reverse course and so forth. So we're hoping that the actions they take have the intended impact, and that the U.S. economy moves back to a much stronger position than it certainly is as of April, middle of April 2020. Okay, I want to show you a few other items with regard to learning materials about the Fed, and then we'll move to the other topic for the week, which is the response to the financial crisis of 2008 and 9. So I've posted, in addition to the slides, which I've gone through at a relatively cursory level, I've found some videos that I think will be helpful to you. They're relatively short videos, but they'll give you some really good perspective on what the Fed is and what their fundamental roles are in the U.S. economy. Okay, so let's look at what the Fed has done, or did do to respond to the financial crisis of 2008. It really took historic and unprecedented actions that, frankly, we didn't expect would have to be used again until the coronavirus hit the U.S. and global economies in a way that nobody had seen coming. So there's a folder here called the Fed Response to the Financial Crisis. When you open that up, what you'll see is something called Panic: Untold Story of the 2008 Financial Crisis. It's an HBO special. Runs a little bit over an hour. I think you'll find it extremely insightful and interesting. So I want you to, first of all, watch that. And I posted another video here called the video, The Fed Response. So both of those, I think you'll find interesting. I have a couple of sets of slides here that were actually put together by the chairman of the Federal Reserve Bank at that time, Paul Bernanke, and he talks about what the Fed has done. So I'd like you to look at his slides. And then when you're done with that, I want you to go to the discussion board question. And the discussion board question focuses on what actions were taken by the federal government and Federal Reserve to respond to the financial crisis. Do you think these actions were appropriate? Why or why not? And what more or less could have been done? Okay. All right. So that. So in addition to that, please do the graded assignment on the Federal Reserve Bank and the other discussion board question. And again, safety should be your #1 priority. And if there's anything I can do to assist you with this course or anything at MCPHS University, please don't hesitate to get in touch. Thank you very much, and that will end our meeting.